we had a couple of magical things happen, and probably the biggest influence of all, you have to go back to 2003 and the story of a company called Barstool Sports. A gentleman by the name of David Portnoy started this company. Originally on paper, he'd release a weekly newsletter, and Barstool Sports really tried to feed information to a sports gambling crowd. So here's who we like this week. Here's who we don't like. This team is on its way up. Football, baseball, basketball, that kind of a thing. Over the years, from 2003 on, it evolved from being a paper thing into a blog. And over the last few years, it's had 8 million subscribers to it, trying to get this kind of information. And the company has a reputation for being a bit of a bad boy. In the middle of March, sports shut down. Every sport conceivable shut down. So if you're a bad boy and you want to talk sports and there are no sports to talk about, what do you talk about? Well, because Mr. Portnoy's buyout, if you will, came with a combination of cash and stock, he was watching the stock perform. And maybe I shouldn't even say perform, because it did nothing but go down, go down, go down. So we get to the middle of March, and his investment, which at one point had been valued at $30 a share, was down to $3.85 a share. And he said, well, you know what I'm going to do to pass the time, since I can't do sports? I'm going to do day trading. And this is the critical aspect about it, I'm going to talk about my experiences using Twitter. So here is where Dave Portnoy, who had Barstool Sports, said, I'm going to have a Twitter account. And he makes it very clear on his Twitter account, I don't know what the heck I'm doing. I'm not a professional investor. Don't really pay any attention to me at all, but I'm going to tell you about my experiences. Well, here we are. We're chatting in June of 2020, and in just 3 months, Mr. Portnoy has 1.5 million followers on Twitter. He has weeks in which he makes hundreds of thousands of dollars, and he's had weeks in which he loses hundreds of thousands of dollars. Really, for him, more of an amusement, because he can't talk sports and he can't bet sports. He can't do anything with sports. But the amazing thing is that these 1.5 million followers don't just watch with amusement and laugh at him. They actually listen to him. And we've now seen what's called the Davey Day Trader effect. If he says, well, I think I'm going to buy 100,000 shares of some company, suddenly the volumes in that company shoot right up because his followers jump along and follow him too. I say all of this to you because if he had tried to do this in some organized fashion, the Securities and Exchange Commission in the United States would not let him. In other words, you aren't supposed to be doing this in the United States. But because it's Twitter, because he has this very clear disclaimer, Securities and Exchange Commission doesn't quite know what to do. In that sense, he's a disruptor. You know, this concept of disrupting technology. He's a disruptor. I don't think it's going to last. Two reasons for this. One, of course, is that sports are coming back, and many of the followers, including Mr. Portnoy, prefer talking sports than talking the market. But the other thing is, I think sooner or later, the Securities and Exchange Commission is going to say, even if this is a different beast than we were expecting, you can't be doing this. Your comments are really affecting the market. The Davey Day Trader Group, and Mr. Portnoy in specifically, has this mantra. Don't laugh when I tell you the mantra. The mantra is, stocks always go up. No, they don't go up. But in the last 3 months, that mantra has been fairly true. If I take you back to March, the stock market lost a lot of value. There was a big plunge, just like it fell off a cliff. And in the last 3 months, in the American stock market, 85% of that loss has been recouped. So for the last 3 months, although each day it's moved around a little bit, it has been on a fairly positive turn, trying to get back to where it was. So that mantra, stocks always go up, isn't such a bad mantra. Now, they got a shock to their nervous system just as recently as about 5 days ago, when the market in the United States had a nearly 1,500 point drop. And I'm sure that gave a little jolt that, well, no, stocks don't always go up. But unfortunately, and I'm going to say it like that, unfortunately, since that drop, it again has recovered almost everything it's lost. But we would teach you at a business school, anyone else, that stocks do not always go up. There are many other factors. But for this unique period in time, it hasn't been that bad of a mantra to make some money.